Hello traders and welcome to another video review. Today is Monday, June 13th, 2022. Let's start with the Forex calendar to see what is going on the Forex markets. So what do we have here? During the London session, plenty of data is scheduled for release from the United Kingdom. We got already some data here. Industrial production misses the expectations, minus 0.6 versus 0.2 expected, worse than a month ago. Manufacturing production misses the expectations, minus 1%. 0.2% expected, minus 0.2 previous reading, worse than expected, worse than a month before. Trade balance shrinking to minus 20.89 billion pound, and the GDP is about to be oh no, it's a miss as well. 0.2% versus 0.4 expected and 0.8 last time. Big miss here as well. And the other GDP sub indices, all of them missed the expectations. So it looks like a British pound will be under the big pressure, and that's about it. During the New York session, we got only FOMC member Brainard that would give a speech. She will talk around about 8 p.m. So it will be good idea to take a look at the British pound across the board because of this data. So let's start with the cable. Daily time frame chart of British pound to American dollar looks very heavy. Why? Because a recent bounce just hit the level of 1.2939, 1.2677, 1.2639, and this is like a technical resistance, the nearest technical resistance and the supply zone. The breakout didn't actually work out. It was failed and capped. Then we have some consolidation, and now we are going lower. We just passed the 61% of the Fibonacci retracement at 1.2355, so that's about it. And it looks like we are going way lower, because let me just copy this line. This is the local channel. However, I think let me just do it again, because it looks like we might use this channel to another, there you go, to another bounce, right? So the lower channel line will act as a of course a technical resistance, dynamic technical resistance. We are just testing 1.2254. This is the technical support, but I guess that we are going towards this low here, the low from the middle of the March 13. This is the low at 1.2158, and it looks like we will get there very soon. Momentum is already down, momentum is already negative, market is under bearish pressure. 36 points, there is still some room towards 30 points, there is still some room towards the monthly low. Basically this is the monthly low, so we might test it and even break it. If we break below this level, 1.2158, the next target is 1.2091, which is very close to the round number. Let me just put the round number on the chart. I will make it in the horizontal way line. This is of course 1.20, so this is exactly what we want to show you, what I want to show you. And let's make it just a regular line. It will be like a black line. Okay, so this is the round number, and it looks like we are getting there. So what is going on the British pound to Japanese yen then? The British pound to Japanese yen made a double top. This is very clear that that pattern is really something that on the daily time frame chart we should take into the account. I've just been thinking like whether this channel is still appropriate. Let me just extend it to the right, but I'm not quite sure. I'm not quite sure whether this will be useful. It looks like the market is reacting on the 50 on a half line here in the main channel. Of course, this is the acceleration channel, this is the secondary acceleration channel. Well, let's see if the market reacts on this channel again. Nevertheless, what do we have here? Technical support 146.62, 164.25, 163.74. Those are the technical resistance. However, if they are violated, market would likely go inside the channel again. Now we got a couple of new technical supports here as well, so not to worry. You don't have to worry about the scenario where we are you know, like running out of the support. After the 163.74, the next technical support is 161.82. Look at this, we got double top, but this secondary top was made on the very low momentum. The market is already reversing. We are still in the positive territory. However, this rally is about to be completed, or at least a nice correction is ahead of us. Let's take let's put the up and the high and low on the chart to see what is going on here in terms of the Fibonacci retracement. And as you can see, the level of 163.73 is the 38% of the Fibonacci retracement and the technical support. Very interesting to see how the market will react on that level. Let me just zoom in for you to find out, because to find out how it looks like, because the most important part of the price action is right now here on the screen during this recent up move towards 168.44. So let's put a new high indication. The new high was made at 168.70. There you go, roughly about there. So this is the British pound to Japanese yen. Let's take a look at the British pound to Australian dollar. What is going on here on this exotic pair? Let me just zoom out to see the context. And as you can see, we have not been of course analyzing this chart for quite some time. However, the sentiment is clear. The market would like to go lower, and as you can see, we got some technical supports. However, they are not being very well respected, because we got the new supports made, and market participants prefer this new supports over the old ones. Let's zoom out to see what are the historical lows, where that low here 1.7175 has not been seen in years, in many years. There you go, this is from 2018. So that's a very important technical support. If violated, then of course we might see another wave to the downside. It doesn't look like any of these levels will act as a technical support anymore. Now I'm just swapping into the resistance, of course. So 1.8132, 1.8066, and of course this level. This is a kind of a nice level. However, let me just extend it a little bit higher. So this will be the technical resistance, the nearest technical resistance on the daily time frame chart. And let me just put this one a little bit lower. So we got the nice thick zone here, and it looks like we are making a kind of a triangle here. Maybe not very specific triangle, but it looks for now like that. So mostly the breakout from that kind of a triangle is to the downside, and we should expect the downside move continuation. The nearest resistance, however, is located here. So that was a small consolidation breakout to the downside test. As you can see here, we got the bearish engulfing pattern, and we got the cap of the bounce, and now we should go lower again. So the momentum is below the level of 50. We've been trading for quite some time in this consolidation, when the momentum was between 50 and 55, and then obviously it went lower. So we are waiting for the bearish pressure more intense bearish pressure, downside acceleration, and momentum of course must drop below the level of 35, sorry, ideally towards the level of 30. In that situation, the breakout will be to the downside, 1.7269. Next target, 1.7175. The 2018 technical support. So let's make it a little bit thicker. So that's the important technical support. Very nice price action during the test of this technical support. However, if we on a daily time frame break below this level and close below this level, the market will continue towards 1.7 minimum. So please be aware of the fact that the British pound is here under the bearish pressure again, as usual. You might say, or like it's been going on across the board. And last but not least, let's just leave this British pound, give a man a break. What is going on the Bitcoin? Beautiful move to the downside, just as expected. This is our arrow, as you can see, from Friday. So no breakout to the upside, capped once, capped for the second time, and then of course direct down move on the Bitcoin. If you just follow Elliott wave perspective, so you can see very easily that we got something like a triangle pattern. Of course we cannot move it here, it's supposed to be here. So we got the wave 1, wave 2, 5 waves down in wave 3, wave 4, and then this is the wave 5. So let me just put it on the screen for you guys. What I mean is, from the top on 48,000, roughly here we got wave okay, okay, wave 1, wave 2, this is wave 3, this is wave 4, and this is wave 5. It means that we should expect a bounce. We should expect a bounce soon, unless wave 5 is extended. However, it doesn't look very much extended yet, so it should be a regular wave, like a fifth wave in a during the impulsive wave to the downside scenario. So there might be no extension, and we might see kind of a bounce here, corrective of course, bounce to the upside, because all of this here, this sequence, this cycle to the downside had been completed. Probably it had been completed, despite the fact that we just broke below very important, well, it was a support zone. Then it, as you can see, it's right now it was a demand zone. Now it's a support zone, excuse me. So despite the fact that we are very low, please notice the fact that this is the last 5 waves during the A, B and C correction. For now it's a correction, it's still a correction, because we are in a multi-year uptrend on a Bitcoin. So we should expect soon, very soon, a bounce to the upside. If there is no bounce but the extension to the downside, that means wave 5 is being extended. Where is the target for the extension? The next target is $20,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.